Hi everybody, this is Lara from Pure Elliott Wave. I am going to update my analysis of natural gas for you. This was requested by one of my members. It was also one of the markets that you voted on from the YouTube channel. So thank you everybody for your participation in that vote. Helps me know where my time is best used. I am expecting that we might have had an intermediate degree, cycle degree second wave correction over down here, but I'm not sure. I'm going to put this here and let it float there. And I'm going to have a look at this movement on the weekly and daily charts. So let's take a look. The weekly, here's the end of cycle 1. Well, first of all, for this wave count, I don't like the structure of primary wave 5. It's moved beyond the end of 3, but it looks like a 3-wave structure. So I'm going to check that on the daily chart. I've got two ideas here for natural gas. We could have had cycle 1 over at that high. And if that's the case, I think it means cycle 2 is not over, because when I look at this looks so clearly like a 5. I'll show you what I mean. And then I can see the subdivisions in the third wave. This looks like an impulse complete down here. And so if that's correct, then cycle 2 is not over. And we're in primary B of cycle 2. Now it could be over here, but that looks a bit brief. I'd expect it's going to continue further. And I think it would most likely be an expanded flat. So get a wiggly arrow. Oh, by the way, I forgot to tell you, I am bringing back gold 5 times a week. I used to do gold. I used to analyse that every day up until August 2021, and then I stopped because it was just too much. But I've been training my son Jack Frost to analyse, to do Elliott wave and technical analysis. He's getting better, he's nearly there, I think. Still backed by me. I'll still be providing him the charts and guiding him through the analysis every day, but he's going to be analysing the gold spot market 5 times a week. We're bringing that back, so I'm going to put a link down below in the description box for you to go and sign up to a list that I'll be drawing up to get notified of, as usual, this is how I do it, a grandfather rate. When I launch Jack's gold 5 times a week analysis service, I'll offer a once only, never to be repeated, very low grandfather rate for you to sign up to that subscription if you want to be notified and not miss out on that, because it'll only be open for 48 hours. If you want to get notified, click on the link and sign up to my little list there. So that's coming up again soon. Okay, so natural gas. I'm going to look at 2 ideas, cycle 1 over here or cycle 1 over here. It makes a difference to whether or not I expect cycle 2 could be over here. So let's look at this first idea on the daily chart. Okay, I want to have a look here at primary 5 to judge the probability of this wave count. How good does this look, or how bad does this look? Let's have a look. No, you'd have to put intermediate 1 and 2 over here. What's this low? 6.014, and this low 6.015. Yep, intermediate 2 and expanded flat. Ending here. C moves beyond the end of A. It's avoided a truncation and a rear running flat. And yeah, that actually looks pretty good. What about this? No. Okay, this could be an ending contracting diagonal, but are the trend lines going to work? So 3 is shorter than 1, 5 is shorter than 3, 4, no, 4 is longer than 2. It doesn't meet the rules regarding trend lines. So this movement does not subdivide well as a 5. I'm sorry, I'm going to have to turn the fan on. I hope my sock on my microphone drowns most of this out. It is so hot here and I simply can't work without a fan. And I don't have air conditioning in this particular room, unfortunately. Okay, so that doesn't subdivide very well. That would probably be best as a single zigzag. Okay, so this doesn't have the best subdivisions, and primary B would be incomplete. I'd be expecting choppy sideways movement. Now here's the other idea. What if cycle 1 was over here? Oh yeah, this has a much better fit. And this upward movement was primary B, and now cycle 2 could be over at this low as an expanded flat. Let's look at the length of C in relation to A. C is 1.86 times the length of A, and B is 1.1 times the length of A. So this fits for an expanded flat, and the subdivisions fit. The subdivisions here actually have a better fit. Let's have a closer look at primary C subdivisions. Let's see if I can figure out how this might work. Not convinced of the subdivisions there. I want to see -3 over here, not here, because this last move here looks so much like a 3. I think we could have 1, 2, 3, 4, 5 in here for -3. Minor wave 1 starts out slow. I think we could have some quick, sharp third and fourth waves in there. Intermediate 2 looks okay. Well, it's either a single or double zigzag. If it's a single zigzag, what if A was over here? And B could be a triangle. A running contracting triangle. And C looks like a good 5 then, doesn't it? Okay. So this was my alternate last time, and I had a target of 3.011. That was wildly inadequate, wasn't it? 1.947 so far. I think intermediate 3 actually has a decent look. Now a lot of people will disagree. They'll say 2 is too big and 4 is too small. No, it's pretty normal for commodities to have disproportionate fourth and second waves, where the fourth wave is a lot more brief than the second wave. Oh, and I'm doing also FX Traders Hub event again, coming up in the middle of, in July? I'm not sure when. Coming up soon anyway. I'll let you know on the channel and you'll be able to sign up for that webinar. I've done a couple of those. They're quite fun. I think this time I'll be looking at cryptocurrencies. I'm going to go through, because that's my favourite charts to analyse. I'll go through how to use Elliott wave to analyse cryptocurrencies. Okay, I think that actually has a better fit. So I think this would be my main wave count. It sees cycle 2 over. Let's have a look at the technical evidence for a low down here. Okay, on the weekly chart, I've looked left first to identify support and resistance at major turning points. There's quite the cluster of support and resistance at the moment. So we want to identify this low, week beginning 9th of April, 1.947. How sustainable does that look? First of all, are there any candlestick patterns off the low? No, there's no bullish reversal pattern off this low. There was a bullish pattern, a bullish engulfing pattern here with a bullish long lower wick, but this low is 1.968 and this low is slightly lower at 1.947, so this is the low here. Okay, no candlestick reversal pattern. What's volume doing? At the low, there was push from volume right off the low, and the next week as well, 2 weeks in a row, and then downward movement with weaker volume. So for the very short term, the volume profile is bullish. That's a little bit of evidence. On balance volume is within a really weak range, no signal. Well, the low for on balance volume here was price closing at 2.127, and then prices closed here at 2.117, so there's a bit of bullish divergence. I'd much rather use on balance volume with trend lines than divergence, though I find my experience over the years shows on balance volume with divergence doesn't tend to be as reliable, but it's there. I'll note that. The downward trend, okay, the previous upward trend reached very extreme, above 40 and above both DX lines. The downward trend did not. ADX didn't catch up with the fact that there was a downward trend until beginning of December 2022, and ADX never reached extreme for that downward trend. RSI did, however, reach oversold. The close for price here, 2.397. The close for price here, 1.992. So from this point to this point and corresponding points for price, there is some good bullish divergence between price and RSI. After RSI reached oversold, let's see how common that is for this market. Okay, the last time it happened was way back here in December 2015. Let's look on the monthly chart and see what that was about. December 2015. back here. Okay. And there was a new low after that, but that was very close to a sustained low. Okay, so there was a new low after that, and there was bullish divergence, and then we saw a bull market for natural gas. Okay, so that's actually pretty bullish. Doesn't mean we can't see one more low. Money flow also reached oversold. No bullish divergence between price and money flow. And ATR declining throughout the bear market. There's a weakness in this bear market. Range is declining, volume is declining. So I think it's better than 50% likely that a sustained low is in place here. The Elliott wave count has a better fit. There's some technical evidence. There is a little bit of push from volume off these two lows, the first 2 weeks up off the low. RSI reached oversold, exhibits a little bullish divergence. And the last time that happened in 2015, RSI reaching oversold on the weekly time frame and exhibiting bullish divergence, that was associated with the low that's been sustained for years. So the probability is better than 50. I'd say maybe 60-70%. My only concern is from this high to this low. The Elliott wave structure looks so much like a 5, but then this looks best as a 3. So this is probably wave C of an expanded flat. Okay, so that would be my call for natural gas at this time. Thank you so much for watching. Thank you everybody for your support. And again, I apologise for the noise of the fan. It's just unavoidable.